Let's go across to Gargi then to get a sense on Novelis and the earnings prospects there.
Well, if you look at the counter of Hindalco, it's not doing too well for itself. If you look at Novelis, which is a 100% subsidiary of the company, that's posted a loss of $12 million versus $46 million. Though we've seen the quantum of loss reducing from last year levels, they have lowered their EBITDA guidance for FY12. That's probably playing in on the stock today. They have revised their guidance for EBITDA to $1.05 billion. The earlier guidance was $1.1 to $1.15 billion for the EBITDA of FY12. If you look at net sales, we've seen that down about 4%. $2.5 billion is what they've posted this time around. Their EBITDA levels also have reduced. $213 million is what they've posted. The shipments, in fact, have been down close to 10% from last year, mainly because of the destocking that was going on in Europe and US. So, this is giving us an indication of the kind of demand slowdown that we are seeing in both these continents, and most of their customers really coming from Europe and US. So, clearly an impact coming in on that one. Their interest expenses after the restructuring was done, that too has impacted the bottom line in this quarter.
Gargi, so broadly, I mean, just the kind of numbers that Hindalco probably didn't want to see Novelis dish out, and a 6% cut in Hindalco. The point being, by virtue of the EBITDA cut for Q4, do the remaining quarters as well look bleak? I mean, are analysts already forecasting for that as well when they're talking about Hindalco and the 6% cut that we're seeing today?
Well, Neeraj, if you look at Hindalco's performance over the last 2 months, we've seen a strong performance coming in for most of the base metal companies, Hindalco included. In fact, very strong fund buying was there. Probably some correction coming in just, on a trigger of Novelis. But if you look at prices of aluminium and copper, both of these are expected to touch, 6-month highs in the next few months or so, mainly because there has been a supply shortage for aluminium for about 15%. There were production cuts in Russia and Europe, both, even in China. In fact, if you look at production figures for China, they have been increasing, and if you look at destocking that has been going down, all of these give an indicator that probably metal prices will actually inch up from these levels, and analysts overall are expecting a better performance coming in Q4.